Good morning, everyone. How you guys doing? Somebody thumbs down the members only stream. That's beautiful irony. It works. What's up, Decky? Hello, Festive Project. This is definitely not a cult, or it. I can't emphasize how important it is for me to maintain that narrative. You still homeless? Well, that's a that implies a lot of things. I currently have no future home, but I'm currently housed as well. Do you want me to change the color of my background? Where did my oh there it went. End of day pool? I'd imagine it's gonna close right around where I opened. Here, let me get the chat popped out here and switch it to live. I must forgot to do that. I could do this. Would you guys prefer this? Ah, that makes me look weird. I had found a place and then I didn't. Okay, I'm gonna stop that. That's a bit much. Well, last week we had some interesting predictions. I feel like we sort of stayed true to them. So let's see here. So this is what I predicted for last week. Um, on the low side, I had another one that tested the high if we actually got a bounce, but since we didn't, um, I mean it tracked right, like, but just lower. Like about $10 lower. The white makes you look sweaty. Yeah, I saw that. Nothing much, Johnny. How you doing, bro? Pro tip: broadcast white is never over 70% brightness. Good to know. I'm gonna write that down in my little notepad of Windmill Willie broadcasting tips. I have another one in there about microphones that I don't understand it, but I wrote it down. 800K volume is kind of hard to predict. That's fair, right? But I mean, the movement of the stock was spot on, right? Just just the range was incorrect. Maybe. Do you think that? I mean, it's a bullish signal. We had three. There's three dojis or four. One, two, three, four. Which just means that the majority of our volume was traded at a level. Well, actually, on these 2 days, nearer the low, but on this day higher, and this day higher. Technically, like if you do candlestick bullshit, this is bullish. But there's a lot of other things that are indicating like a bullish turnaround as well. I don't know. I don't know if Moon One's gonna sell fucking CCs next week. He might. Risky. It's always risky. Like I sold CSPs, like cash secure puts on Monday, um, just under the EMA 160, and yeah, that was fine. Didn't even come close to getting assigned. Of course he will. He's a degen. Maybe. Win volume. That's a good question. Um, it's fallen off. I think the last day that we had any significant volume was here, and that was how much volume was on that day? Not get out of here. I can't see because it doesn't show me. Here we go. 1.9 million, and it's just been downhill ever since. I did some DD. Next Sunday, October 17th, will be 69 days until Christmas. That close to some of your rollover dates, right? Right. No. I have no predictions for Christmas. 3 million on the 30th. Yeah. Wait, this was 3 million? Why is it not showing that? Hold on. Oh, okay, yeah, 3.17. I think it was highlighting something else for some reason. Someone mentioned Fed is closed for Columbus Day, so possibly no RRP. I know you don't pay much attention to RRP because we don't know how it relates to GME, but is it something to watch? No. I don't pay attention to RRP because not because we don't know how it relates to GME, it's because there's no causal link between GME and the RRP. So essentially RRP posts are mostly bullshit. If somebody were to come up with a reason that they're linked, then yeah, I might care. But so far, I have yet to see one. To lower the volume, more explosive the upside, bring it on. Yeah, I mean, we already know that like if we go out here to like the 15-minute and we look at what day was it? It was like the big spike on I think it was here on the 30th. Was 30th that last Thursday? Yeah. So this was hold on. This is like 6,000 volume, 1,000, 2,000, 22K. Like this whole thing was like 2 block orders for like 400,000 shares, and it brought us up 168 to 185. So almost $20. I imagine what like a block order for $1 million would do, or 2 million. And now I'm really thinking that spike had very little to do with DRS. I think that was in order to keep us off of the threshold list, since we didn't experience anything even remotely like that this Thursday. I mean, this was the closest, and I think this was basically nothing. Yeah, 4,000 volume. I slept okay last night, Luna. Thank you. What are your thoughts on loop ring Q4 NFT exchange with unconfirmed GME connection? I have no thoughts on NFT as a dividend at all. I don't think it's not only do I not think it's the right vehicle for like a dividend, it's so highly unlikely. Like the legal ramifications and stuff just make it. I mean, there's no reason for them to do it. Essentially, on the December fail, the equivalent of upcoming 1013 we're looking at was 113, where volume went from 7 million, 1.5 to 144 million in volume on 113. You're expecting a similar volume on 1013? I think we're really looking at September. Hold on, I hate using trading view to view volume. It's really difficult. Let me open WeBull so we can get a better look at that. Where is it? All right, so if we go back and look at September, I'm expecting. Hold on one sec. Let me get that. There we go. This kind of increase in volume here. where it went from like 2 million, 3 million a day average to 70 million, and then maintained above 5 million a day all the way until the peak, which was here. But I mean, yeah, also similar to this, the volume does pick up and increase. Like this was very low, not as low as September, but lower. Still all significantly in excess of what we're trading at now. But also, GameStop wasn't as a liquid back then, right? Like there was far more liquidity back around that time, and so like I don't really know how that's going to play out now with our super low volume. RP's blowing because people start to mistrust the stock and bond markets. They pull cash out. All this cash has to go somewhere. RRP's blowing up because it keeps the interest rate from being increased. Right? So they pull the liquidity out of the market and deposit it with the Fed so that interest rates don't go up. If interest rates go up, that's going to start like a cycle of reduced yields, but austerity measures. And that's obviously very bad for the market. So by pulling that liquidity out every night, they're able to stabilize the interest rates, which are super low right now. And low interest rates, promote growth and expansion, which are the things you need to, have a strong economy. Why wouldn't GME issue a stock split? Cohen would still hold the same percentage wise, plus the split opening FOMO and see. Well, there's a few reasons for them not to issue a stock split, which we've discussed in the past, Johnny. While it would be good, it does open Cohen up to other people trying to move in and take the company over. So it weakens his position by putting more shares out there. Somebody else could buy in. It'll also, I mean, like a stock split isn't necessarily good for us for people playing MOAS long term, right? Like the announcement of a split's really good because it'll cause the price to run, which can create FOMO and with the short positions the way they are, really put a squeeze on them. But post split, not as good. People will be far more willing to sacrifice a number of shares for profits or things like that. It definitely changes the mentality. And then also larger float means it's easier to cover. So there is a risk there. Won the lawsuit on releasing an NFT. You're talking about Overstock.com festive. They won one of lots and lots of lawsuits that are still pending against them. Or actually, they won two, I believe. But I mean, the legal battle that follows up doing that is probably not worth it. And just because they set a precedent in one area doesn't mean that that's gonna, protect them in all their suits, because for several different reasons. But there were other issues with that. They released, a crypto dividend that really couldn't be acquired by the shorts. And so that really forced the shorts to have to cover. Last stream, you talked a bit about future Pickle Picks vids. You talk more in depth about one position. Just want to say that's a great idea. I can't functionally read, so that would be 10 out of 10. Yeah, that's something I'm looking at doing after I move and I have like more space to record in and more time to record uh like extra videos. So that's still going to be like in the future a little bit. I'm sorry about that, but it's definitely one of the things I'm looking at doing. So plan on that, I guess, but in the future. When we see a fail cycle, what happens after the T35 spiked? They cover whatever FTDs they need to cover in that spike, and then it's possible that they write a new contract once the FTDs are covered. Um, but it's more than likely that they just cover, and that covering creates a high enough spike that people are willing to sell, right? Because that's really what we saw in last September and January is people exited on these, right? This was selling. That's why it went back down. Especially January, not so much September. And also that they still had a very strong ability to short the stock back in September, which they still don't have. The effect of shorting is significantly different now than it was back then. Again, that has to do with the liquidity, though, right? How come the stock is so illiquid at this moment when we have a noted 12% short percentage and not last November when the stock was reported super short? Because the reported short position, first of all, is not really accurate anymore. And I think the only reason that we saw an actual reporting of the short percentage, like that high of like 140 or whatever it was at, is because they fucked up, right? Multiple short positions reported at the same time, um, the entirety of their short position, and like without each other's knowledge, right? And that led to a lot of what we saw happen in January, where we saw like Citadel and Point 72 bailing out Melvin, for example, and Robinhood. I think up until that point that none of the short positions really knew about the other short positions. That's a good question, Average Monk. I'm still unsure, but I believe, and I haven't really talked about this a lot, but I believe that one of the effects that we see on like in the way GameStop tracks AMC, even though it's still no longer a part of the Russell 2000, has to do with the fact that there are still a significant number of GameStop shorts in Russell 2000 ETF options, right? And so I think that's why we still see that tracking occurring, even though they're not in the same indexes at all. That's really hard to prove in any significant way. Um, and even harder to understand if the derivatives chain of an ETF has an effect on the stock of the that is weighted in that ETF. I think it was more about Burry getting out. How does that even impact brokers? Well, there was a share recall last year. A small, like not everybody, but a small one, which may be another reason that we saw that huge spike in short interest. So you don't think that the float is accurate still based on how high the stock price is at this point? A confirmation of them not closing? I mean, the float's accurate. That's how many, shares are free. Um, but the synthetic interest on that float is far greater than the actual float. Maybe I'm just not understanding what you're saying, Deadwide. A pigeon whale sees poors getting beaten up. Will the pigeon whale help the poor or join the bullies? It's hard to say. I don't know. What's up, Saint? Welcome. Should ETFs be abolished? Probably. I'm sure the cat's too far out of the bag on that one, but they seem tied to most of the bullshittery. Yeah, and this was one of the issues that I had early on with like the swaps theories, is that they didn't account for ETF involvement. And I think ETFs are I think that's what the basket is. So when they were talking about swaps and they were like, oh, these are all in baskets, I think the real baskets are the ETFs. That's what ties all these meme stocks together, is because that's where all these stocks are found together, right? That is the common trait amongst them. Pin is the poorest, not concern the mighty. Fair. I think that's going to be a decision independently made by each pigeon whale. Well, that's interesting. Damage reduction. So in September, we had some pretty significant movement going in, like what would have been Thursday and Friday of this week, going into that anomaly window, right? But in January, we really see it occur directly on the fail date. So this clearly the FTD pressure wasn't as high here as it was going into January. We'll see how it plays out this time. But we could see a little bit of movement Monday, Tuesday as well to the upside, but maybe not a lot. Remember, they can cover during that T35 period, they can cover at any time. They just always wait till the end. And there's a reason for that, because money in your pocket can make you money, whereas if you spend it, then it's gone. If a pigeon whale sees one of the outcast paper-handed pigeon whales getting beat up by a poor nutsaculon, will the pigeon whale help his fallen brethren? Absolutely not. No. Otherwise, there'd be no merit to being a paper-handed bitch. So no. I think if anything, the pigeon whales revel in watching the downfall of their fallen brethren. Would regulation banning shorting ETFs stop the fuckery? Probably. I think what they really need to get rid of is the liquidity provisions. I don't think that we need ETFs and market makers both being able to supply liquidity for the markets. Yeah, that's correct. Damage reduction. They also could have bought all of this week. They could have bought all the way into the roll date Yeah, so obviously they're going to push it out as long as they feasibly can. Yeah, so if I don't see any volume or significant moves to the upside in these coming weeks, then I am going to assume, maybe incorrectly, but it's the only assumption I can make, that they got enough shares in this period from ETF rebalances and the share offering that they did not have to cover here. And so, in fact, them not rolling was not the disruption of the cycle, but this share offering made it possible that they didn't have to cover until the roll date. But we'll see how that plays out. Another confirmation of that will be if, out here in November, if they roll into the December roll date, right? So if we see the volume occurring here in this window, so we're getting like the expected spike on November 24th, and then we see the volume continue upward into the roll and then tank after, repeating the March and July cycles, then that's also pretty good confirmation that they just simply had enough shares that they didn't need to cover this cycle. Also, the lack of a significant anomaly will indicate that as well. What's that purple box? Oh, this is just this last week. Like the I think it's a bit longer, but this is the price movement then from it's like the mirror of this last these last couple weeks. So it's just where we were in the cycle up until Friday. And then this candle and this candle are this coming Monday and Tuesday. AL. Would not seeing volume between the 13th and 28th of October break the MOAS thesis? No, I don't think so. Why why do you think that? Would a gamma ramp near the anomaly date reinforce the current theory? Yeah. But here's the thing, like just cuz I found it and, this is what I've come up with doesn't mean that that's like a thesis that the longs also share, right? Or that, like, it doesn't necessarily mean anybody fucking knows about it or cares. So, I mean, we may not see any options interest until like November. We see some like significant open interest on the 19th right now. And obviously, like, if this ran in this window, then those would print super hard. So it may be that they're building their ramp out there. We may see options volumes pick up this week because IV's just so low anyway. But we do know that they forced that gamma ramp through here, right? Through this window, and that they didn't roll it, right? So they kept it in place to prevent them from covering. Looking back over the chart for this year, we seem to continue to come back to our current price level. Do you think it's just a good established support or some other significance? We don't. We're always higher. Our lows are higher. Um, a user. Like, these are all higher lows throughout this time period, even from here. I mean, we've never again come back down to like 118 like back in March. And even on volatility, our lows stay higher. I was thinking about this because if they got enough volume from the very limited share offering, that would indicate that the actual short position in futures is lower than we thought. No. See, they only have to cover the loss during the length of the contract, right? So if the contract's 3 months, right, and you know they created it here and rolled it here, right? They just have to cover this, right? Like they only have to cover the loss on the position before they can roll it again. They don't have to cover the entire position. They just have to cover the difference, essentially. We keeping up with the Evergrande bond situation? Not that much, honestly. I think it's significant. I think it's more significant for China. There's still that like it could like there's still a possibility it can have a net positive effect here as money flows out of Chinese markets, U.S. money and international money flows out of the Chinese markets and back into the U.S. market. But the market is behaving very strangely. This may be the longest period of like bearish divergence without a move to the up or downside I've really ever seen. I mean, it's down, but not significantly. And it's difficult, right? Because so many positions started in like March 2020 that they're all so significantly up. Like that the fear needed to elicit a sell-off really isn't there. But I do think Evergrande's kind of the tip of the iceberg, right? It's there's a lot more problems which it can help catalyze and like bring to light, but we'll have to see how those play out in the coming months. That was weighted to the dip in March, Max. I think I showed that last week when I showed VWAP, right? Let me go out here. I'll show you guys again. So if you go to the 1 day, so this is that weighted VWAP, but here I think it's in this anchored VWAP. You just bring it down here to the dip in March and click it, and that pops up. Here, I'll make it yellow so you can see it. It's this line right here. Did the other meme stocks have the same gamma ramp? Oh, at what point in time, Harry? What then would be the possible explanation for not covering their previous gamma ramp then? What do you mean? significantly than usual. Yeah, I would say so. The market's starting to realize a lot more downside risk, right? Did the other meme stocks have the same gamma ramp, AMC, BB, knock, etc.? Yeah, it depends on the point in time you're referring to. Not necessarily. Sometimes yes, sometimes no. Newbie option paper trading question. Why did you not buy your options this past week? But wait, was it to save on theta? Yes. Also for buying it. I did buy options this last week. I bought options on Friday. Also for buying a future call. How do you choose your out of the money price? I choose it based on previous support and resistances. So like I try to be within the mid range of the next upper resistance, which is at 220. So I have a lot of calls at 200. I have some at 220. I have some at 210. Okay, so not getting. Okay, hold on. They may or they may just begin covering Protege Sun. We'll see. There's a decent number of in the money puts this week, so I don't expect a push down on Tuesday. But if the market drops, I mean, we're going to see some downward movement unless we get volume. Would not give me a try on the. Okay, so not getting enough volume would tell us that they still have had enough capital to cover the loss on the position. It would not give us any insight on the short position. That's correct. Something interesting I saw from Linux's DD is the SPY dump on the third Fridays of the month due to SLD deposit requirements. Think this can be something that will happen forever. I mentioned this weeks ago in my DD. I don't know if Linux got it from me or I got it from him, or but yeah, the SLD dumps. I was actually talking about this with somebody from Dillionaire's like a couple months ago. Um, but yeah, I mean that's been going on for a while on the SPY. It's pretty visible if you look at the charts. They happen, on the third Friday, or on the third Monday of every month. Fourth Monday? I think it's the fourth Monday. No, third Monday of every month. What if the longs knew the gamma ramp would stop them from covering and cause the anomaly, which would kick off MOAS? Possible? Possible. I mean, that gamma ramp that they built and used didn't cost that much money, really. Um, but the time in which they implemented it was very, very effective at preventing upward price movement. All of the analysis is based on the assumption that they have to abide by the rules. Given they are desperate, what's to stop them from cheating and flouting the rules, making the FTDs disappear? Because for every trade, there's another side to that trade, right? That's really the ultimate rule, is that no lender is going to allow them to steal their money, right? So for all the, power and rule flaunting that you want to accredit to Citadel, like people who loan them those shares, like BlackRock and Vanguard, they're not going to just sit idly by while, Citadel makes their money disappear, right? You can't damage reduction. The short exposure report doesn't tell you anything more than they want to report. Very frequently they'll move out of. I mean, it's like they're not going to show their hand, right? So they report the bare minimum. They shift positions into the reporting date, so they don't have to report the entire extent of their positions. And that's why, every short report comes out with, all the hedge funds looking like they're taking very responsible, appropriately hedged positions on GameStop, and yet we have these like wild fucking price fluctuations every quarter, which indicates that they are not holding the positions shown on their short interest reporting. The most recent one, I mean, AMC, it's hard to tell because there's basically a gamma ramp every week, just because of the amount of volume there. BlackBerry, Nokia, I don't think is like a meme stock. Its float is astronomically large. It had short interest back in January, but really hasn't done much since then. It doesn't track well with the other ones. It's also like a huge high frequency trading target. So it's really hard to get. There's a lot of noise because of that, and it always trades a ton of volume also because of that. BBBY, I think there was a ramp around that same time, but not nearly as significant. Assuming the peak around 128 works out, 1128. Upon what will you base your decision to exit your GME calls as to whether the spike will lead to MOAS or we go back down after the spike? I mean, I'll just exit them. Like, I'll just take profits, right? Like, I have plenty of GameStop shares. I don't give a shit about holding them through MOAS. But everyone's position's different. I guess if I wanted more shares or cared about that aspect of it, um, I would probably wait to see if hmm, I guess like a slip of more than 20% in the price. I would sell, assuming that they are gonna drive the price back down until November. A significant short attack, or big price drop, kind of like we saw in March and post earnings. You know, this that would indicate a good moment to sell, and you'd still be profitable, right? Because you'd still be significantly above, where you're going to end up. But I guess that's what I would look for to get out if I did think MOAS was a possibility at that point. Um, but yeah, for me, I'm just gonna take profits. I don't really care. What do you think was primarily going on when we dropped from the all-time high 483 to 110 back in late January in a matter of hours after the buy button was shut off? It was, I mean, we were very high for several days, right? Uh, Starting on the 27th, the low on the 28th was 110, but then, right back up on the 29th and still, very high on February 1st. It wasn't really until February 2nd that we saw significant downside. But people were selling, right? Like there seems to be some sort of idea that everyone held through this. And the reality of the matter is the only people that held through this were the people that were in here. Like the people that got in late, right? The people that were in early fucking sold. So they were selling, but they were shorting through this whole thing, like 50+% a day. So there was short interest and there was selling, and the combination of those two allowed them to get the price back down into like the $60 to $40 range, where we sat until the next ETN ETF rollover. The wrong candlesticks. I believe that China's house of cards has begun to crumble. The loans required to uphold the real estate market can no longer be maintained by the majority of investors. True, but China can also just A, print more money, or B, shut it the fuck down until they can figure out a way to recover. They have a lot more governmental control over their markets than we do. Their markets are, in fact, not a fair market, right? And also their government can react very, very quickly to shifts in market sentiment. Expecting the same amount of firepower as September 2020, 200% this time around, or is it just? It's impossible to tell. There's too many variables to predict what effect on price movement this possible anomaly will have, right? The everything crackdown is coming. We'll see. What's the weekly expected action through GME? We're expecting a small to medium bump sometime this week, due to the first 35-day failure occurring. The next one's going to occur next week, around Thursday, completing probably around Thursday, Friday of the month, the last Thursday and Friday of the month. So I'm expecting a 15 trading day or 15-day calendar day run from the 13th to the 28th. That's what I'm currently looking at. There are two sides to every trade. There still seems to be a mutual interest in keeping the casino going. So it seems balanced between one's direct interest and causing a depression. No, because it's still individual entities. And while like the short positions may be acting in concert in some way, or the larger short positions on GameStop may be acting in concert on that position, they're not working together hand in hand in the rest of the market, right? Um, the entire methodology behind how they make money is based on them, countering and outplaying their opponents. It is a competitive market. So, the idea that there would be shared mutual interest in keeping it all afloat, maybe from the DTCC or NSCC, SEC, from a regulation standpoint, yes, but for hedge funds, no. If they see weakness or blood in the water per se, or so to say. They will attack, right? Because that's where the profit is. And I think if BlackRock or Vanguard thought they could recall their shares and destroy Citadel, they would. Um, but they would make damn sure that they were able to, right? Like, if you're going to go for the killing blow on an entity as powerful as Citadel, you definitely want to make sure that you don't miss. Huge freaking wedge. Who says they haven't already shorted the breakout? What was the red flag or indicator that put you on the trail of futures contracts? What made you dig into it specifically? I asked because theories tend to get applied to every stock eventually. Um, I would say the first thing that we noticed was I think right around the time we started doing this was shortly after the June July run up. Um, we started to see kind of a cyclical pattern between these two run ups. And then as we looked further back, we saw more, and we had these windows that we were looking into, which we have now defined. And this was like when I first started talking about, like, we had this secret DD, right? But we didn't know when they were going to occur, and we weren't really considering that it all lined up to something. And as we dug deeper, we started to see that, like, these were lining up with the futures rollover dates, and we couldn't figure out what was causing these, and so we dug into those, the ETN and ETF rollovers, and it started to, like, slowly build a picture of what was occurring. But I'd say the first thing that really got me thinking about it was that it was actually the timing of GameStop's earnings, because GameStop wasn't announcing their earnings weeks in advance or months in advance, right? They were delaying to the last possible minute, and then landing their earnings on dates really, really specific to these run-ups. And I think that's what first got us curious, even more curious about these like anomalies in this trading that we were seeing, right? Because no stock should just go from 150 to 350 and then back down to 150 in 2 weeks and then repeat that pattern, right? And so the more we dug into it, the more pieces of the puzzle we were able to put together. And that's me and all the guys on the quant team who helped ultimately build the thesis behind this. The notion that the government doesn't let MOAS happen because foreign markets and investors would lose faith in the system. We still hold the biggest stick militarily and likely economically. Yeah, I don't think the government is actively trying to prevent MOAS from happening. At least not currently. There's some validity in the loss of faith in the system argument, but I mean, I say from a military standpoint, we could just prop the system up regardless of sentiment. Got some more paychecks. I'm planning to double my GME position. Is this week as good as any to buy in again? I mean, just anybody looking. I tell everyone who's looking to buy in more to GameStop or to buy into GameStop the same thing. The average position cost basis is between 162.50 and 196. So anything in that range, and especially if it's trading at a price lower than your current cost basis, is a good time to buy. That's like a fair price for GameStop in current market conditions. Yeah, I would say that some of the things going on with Citadel and the media lately definitely indicate that something's wrong. Something that hasn't been wrong since, January or February when they spoke with the House Financial Services Committee. Because we've had basically radio silence from all the hedge funds involved in this since then, until recently. Which means they're losing investors, which means, their investors know something. Possibly something we don't. I mean, they have NDAs, right? Like, they're not supposed to disclose the positions of the fund, even if they pull their money out for a certain period of time. But, I mean, as everyone who's ever signed an NDA knows, that information gets around anyway. Is that a giant head and shoulders on your chart? No. A very small percentage of people realize this is happening. If the government somehow stepped in and bailed out the short hedge funds, then nobody would care except us, and the market would keep on turning. Likely. I mean, there'd be some, news articles and shit, but the problem with that is they have to bail out the longs as well, and that everyone's gonna notice, right? Like if they're bailing everybody out of their GameStop positions, it's gonna be very obvious. For people into the chip sector, probably a good idea to read on China's taking the Taiwan saber rattling to a new level lately. It's concerning. I mean, if their economy's failing, they're going to lash out, right? It's typical. Ida, thank you so much for coming along, Johnson. I appreciate that. What'd you have for breakfast today? Double espresso and uh 4 shots of espresso and an English muffin with black currant jam. It was delicious. Wow, we're only an hour into this. I feel like I haven't stopped talking. You need more protein for sustained energy. I eat plenty of protein. Thank you, though, Luna. If the cycle is similar to last year's, how soon do you think we could get above 200 again? Next week, possibly? Yeah. I can see a 20 to 30% increase possibly occur this week. But also with the illiquidity and stuff, maybe they can even push. Here's the thing: is that there's a possibility they can push this thing all the way out to the end, right? Until it's because we don't know if the fails are stacking at the same rate that they were last September, right? So maybe last September they had like 50 million fails here, and maybe this time they have 10. So maybe it was like 50, 100, 150, right? And this time it could be like 10, 40, 60. And if they want to like try to manipulate or make the cycle less obvious, it would behoove them to is it just back? All right, I hope it's back. Fucking Epic Pen, man. What an absolute piece of shit. Yeah, it would so in that cycle it would behoove them to try not to cover through this first cycle, technically, right? Because then that kind of throws off the timing. So if they're if they're forced into these positions, the best move they can make is try to throw the timing off, in order to prevent catastrophic risk from gamma ramps. But I feel like at this point the longs have learned their lesson, and they pay for the extra theta in order to realize the move, regardless of what the short hedge funds do. And that's like a tact that everyone should have probably taken on GameStop from the beginning. Is that weeklies and bi-weeklies, option contracts are just risky, right? And we should just be focused on like monthlies and quarterlies, and that like the amount you pay for theta is worth it in unrealized losses long term. Is Epic Pen a Microsoft product? No, it's just a shit product. Sorry about that, everyone. Epic Pen's game part. No, it's always done that. It's usually I'll notice like the weird memory dump thing it does starting up before it actually happens, and I can turn it off and reset it and kind of clear the cache or whatever causes that. Out the money quarterlies for the win. Kind of, yeah. If you tried using a pencil. No, we didn't just get started. We're like an hour and 10 minutes into this. Oh. All right, is this working again? Okay, there we go. Yeah, so their best bet would be to try to drag this until the 21st, right? But the problem they're going to face is that most of the OI right now is out here on the 19th. And I don't think it's even remotely possible that they drag it out that long. Yeah, I have 200 Cs for next week. I'm buying my weeklies closer to the money, and then my further out calls further out of the money. So I have 200s for this week, 220s for October 22nd. All of which, if we run hard this week, I'll probably sell this week and move further out. But I also have like 250s, 275s, 300s for December and January. So I'm from an option standpoint, I'm playing this one much safer. After my $500,000 in unrealized gains from over here. I'm not going to make that mistake twice. But to be fair, at that time, I thought they had no choice but to roll in this window. So, based on what I knew, it was a good play. Can you learn us something about where to buy into a position? I always seem to buy high and sell low. I'm I'm not sure what you mean. I mean, if you're buying high and selling low, maybe you should be playing the bear side. Generally, you want to look for entries at the low resistance, right? Or this like here, like this is a good entry, right? Because it's at the low support. Even if it fell a little bit below that support, like it's not going to fall much below it. We've got one dislike on the members only stream. It's been there since the beginning. I don't know who did it, but it's ridiculous. You looking at any other plays this week, non-GME, that could help me pay my mortgage? That's not a good position to be in. No, unfortunately not. Smile Direct Club looks a little bit interesting going into this week because of the options chain is going to expire. So it could run if it's going to. I think the open interest is astronomical at 7. So there's definitely a possibility that it runs, but I think it's not going to run much past $10 if it does. At least it doesn't look that way right now. Although, I thought the same thing with Spurt, and that ended up running to like $50. So, but the setup and entry are looking very similar on that. Super risky, but that might be a moneymaker. I think Tesla was like looking kind of interesting for this week, so I might play that. I guess I can show you guys that while we're here. So Tesla is kind of still fighting for that upper resistance, but it looks like it's failing. So Tesla generally bounces really well. So I'm going to be looking at this lower support, which is currently now around like 771 for a bounce. Possibly buying in then. Although there's a chance that this holds, and it ends up trading in this higher channel. So it may be ready for a bounce already. And that'll just depend on market sentiment, which for Tesla is wild and unpredictable. But I might be interested in that. Facebook's still looking kind of shitty. I think it's got some significant room to the downside. If it breaks through this 330, I'm thinking that like it could go as low as 315 or 300 even. So I'm pretty interested in put positions on Facebook right now. Trying to think if there's anything else. I think that was it that I had really picked out for this week, besides GameStop. Obviously, like my focus is going to be on GameStop for the next couple weeks. So only my 10,000 loss doesn't feel so bad. Well, you have to remember that when you have like 5x shares, right? That every dollar up or down represents a minimum of a $10,000 shift in your position, right? So when we go from like 350 to 160, I feel it. It's okay. MOAS will happen. And you'll all know how it feels. No, I haven't, Agent Scarn. That sounds disgusting. So buying a 200cc. Why are you referring to them as CCs? Are you buying a covered call? So you're buying the underlying and selling to close a call? Or are you just talking about like a call? It's just C. 200C. That's a long call position. Yeah, it'd be an incredibly huge waste of premium, right? Because you expect all the moves to not only occur before April, but you're just paying for a ton of data you probably don't need. Now here's the thing, if you hold that through the expected window and don't see anything and then you sell it, you've lost less money than someone who bought them with less time on them. So it's not an incredibly huge waste of premium, but it does, limit the amount of exposure you can have because your premium is so high. So you might be able to buy like two 200Cs for April, right? 2022. Whereas you could buy like 10 200s for November. Now, if nothing happens by like October 28th, these will still be worth basically what you paid for them. And these will have lost some value. And so that's the risk, I guess, with buying them nearer strikes. Oh, seasonal AMD drops. They happen. They're a bit unpredictable. October 29th calls are cheap. Yeah, they're not bad. The only problem I have with the October 29th calls is you can't, if it keeps running past October 29th, you can't really encapsulate that movement, right? So like if this actually triggers MOAS and you have 29th calls, they're going to expire like as MOAS begins, right? And so that's why I've been looking at the 19th. Like I have weeklies for the 15th, the 22nd, and the 29th, but the majority of my positions on the 19th. So like I don't expect these to do anything but just churn profits if we move. And then if nothing happens by out here on the 22nd, I can still sell these, right? And move those out. So really the only big risk I'm taking is these two weeklies. If the market does big ouchies this week, do you think GME will likely repeat pattern of sideways with a chance of slightly down? It's possible. It'll definitely be harder for us to move up with outward market pressure pushing down on us. Can you explain visually the screenshot on your buy and hodl DD labeled representation of the original GME short position on long-term OBV? It's like I believe it was the weekly OBV for GameStop that I was highlighting there. I was kind of trying to show the breadth of the original short position compared to what has been traded since. Let me see here. Wait, I just saw it. There it is. And so if you look at this, maybe it was the monthly. Yeah, it was the monthly. So if you look at this, this is kind of where the short position on GameStop started. Was back here in like 2014. So this was all shorting. And this is what's been traded since. So, you know, OBV right now at like peaked at like $1 billion here, but this also encapsulates all retail interest. It covers, you know, all market maker activity and short hedge fund activity, right? And so you can see that like we haven't even come close to like this is like the tip of the iceberg, right? Compared to what the actual short position that they're carrying over in these futures contracts. So if you think about just the amount that needs to be covered, right? Because of that 80-20 rule, right? Like 20% of the stock has to be shorted for them to drive the price down, but then they need to short the other 80% to drive it out of business, right? And in reality, this was because people weren't selling and they couldn't drive the price down to zero. This is more like 300% of the float shorted, right? And we just simply haven't traded enough or high enough to recover or cover that short position. So it was mostly just a good visual representation for people that are, you know, confused. About just how big that initial short position was. And that's not even counting the short positions on, you know, ETFs like IWM and stuff that were also occurring at that same time. Because GameStop plays into like some much bigger picture things that really don't necessarily get considered when people are just focused on GameStop. I got my 60-inch TV right now, and it's life-changing. Thank you, Sanjit's Assassin. Whoa. I don't like this name. What did you do to Sanjit? Give me 1 sec, guys. I just gotta grab something real fast. So wait, let's talk AMC. No, I'm back. Don't do that. See, Lebanon's having trouble with their power bill. No. I mean, what we saw in January was really just an effect of it not realizing its potential, right? When you look at GME on this scale, it's really just, and now it's just trapped here, right? Like, so the pressure is not relieved. They just managed to stabilize it. Moas starting. Um, any other questions? We've run out of questions. Ask me questions. What the fuck? Huh? Are we up today? No. I mean, yes, but no. We're not. It's Sunday. Early dismissal. You don't have to be here, a user. It's like a college class. If you're bored, leave. Are bonita fish big? I have no idea. I've never seen a whole sized one. Just their shavings. Can you explain a poor man's covered call briefly? Yeah, you're selling a naked long call and hedging it with a closer to the money. You're hedging it with a bought long call closer to the money. So the idea is that, if it moves against you, you can use the closer to the money call to cover the naked call that you sold. They can be risky. Also, the profit potential on them is pretty capped. It's not something I do frequently. They ironically are better if you have shitloads of money, even though they call them a poor man's covered call. But I play breakout and momentum plays, right? So for me, things are much simpler. I just go long or I go short. I don't really have to do a lot of hedging in my trading style. And I prefer that. I think simplicity is better. Sometimes I'll hedge, but only really like positions that I'm holding long. Um, and because I'm in and out, and only on specific movements, if that movement doesn't play out, I'm just out and I'm out at a loss. Um, I guess thankfully I'm usually right about the movements I expect. I feel like a lot of option strategies and stuff are designed to limit risk, but in ways that are capital intensive or limit your profits. And so those aren't really my preferred methods for trading. I would describe my trading style as more like Wall Street bets, but with planning. I mean, they use married put calls. There's a lot of different ways to reset FTDs. I don't debt swaps. You could. Can you show and explain an ideal breakout that you would trade, even one in the past? Sure. Let's see. Baba had one not that long ago, I think. If we go down to like the 4 hour. Well, I did trade this one, so I can just use this one. There's another one further back that's maybe a slightly more ideal setup. There's like a long-term downtrend, right? From a rejection at 175. Um, we were showing it was starting to show like a little more stabilization in its drop. It hit all-time lows there for I think at least a couple years. So all-time low since 2018. Um, we started to get some consolidation right through here, and started to realize like an actual bounce. I think if I pull up the moving averages, you'll get a pretty good idea of that, or at least ADX. You see the crossover in ADX as it goes to move towards the upside. And those, we're approaching before it really ran hard. Stotch shows a bounce just right above oversold. We have the moving average, which you can take a look at here. Nope, EMA. Sorry. So it had fallen. It had already fallen below its like long-term EMA trend. RSI had bottomed out right around here. So everything was pointing towards the upside, and that's right around when I bought in. But that was like an excellent breakout. As soon as it started to consolidate there around like that low of 138, that was a pretty good indication that it was getting ready for a move to the upside. Also, this is maybe not the best example because it was heavily influenced by market market movement as well, because as the Chinese markets and the SPY recovered, this has exposure to both. But that's more in like why I chose the play than the actual breakout. Baba's movement is going to be entirely determined by US and China's market sentiment this week. It's already back at like 160. It's got room to the up and downside now. It could keep running, but it may not. I mean, the way I play options windmill versus the way you look into them, for me, it really is as simple as the price went down. And so the option is cheaper. And I mean, unless there's a large volatility spike in the downward movement, then that's almost always going to be true. And the way the market's been acting the last several months, with bullish sentiment still staying really strong, things aren't dropping nearly as fast as they're climbing back up. And so you're not getting a lot of, like, you saw that with IRNT, like there was never really like a big strong sell off. So there was no IV spike to the downside. IV actually bled off the entire time, but thankfully I bought them close enough to the money that the intrinsic value outweighed that loss. I'm still trying to wrap my head around how they could fail instead of covering these futures this round to survive another quarter. If that's the case, does it mean they rolled enough futures during? No, there was a massive gamma ramp there that prevented them from rolling, I believe. They tested it at one point shortly after the run up on August 24th. We ran up to about 2:30 one morning, very, very fast and on very low volume. They smashed the price back down and haven't tried to run it again since. Not significantly, except maybe that Thursday where we went up like $17 or whatever it was. But that I think was just related to FTDs, and they'd gotten the price low enough, and there was no ramp present at that point. But the ramp was definitely the reason I think they weren't able to cover. Thoughts on people saying brokers don't have all the shares they should for cash accounts, and people that have shut off lending of shares? Well, I mean, if they're synthetic shares and people own them, then of course brokers don't have the real shares, right? Tanksimus. But the amount of borrowable shares has been low for a long time. I read the Aziz book you recommended. Okay, I didn't recommend it. I said it was all right. It's I kind of also hate that book, but it does cover some useful information. So if they survive this round, what position will they be in come next quarter for futures? Not a good one. That's why I put most of the weight on January anomaly occurring. But I don't like the idea of picking small companies no one's heard of. I mean, I usually don't play small companies no one's ever heard of either. I usually look for bigger movement and large, stable companies. Um, but I'm not again like I won't play penny stocks and shit. Like I'll avoid things that aren't in major indices. That's why when people bring up penny stocks, I'm just really not that interested because like even if something happens there, I don't want my money to be at risk during it. If we don't see any movement at all this week, will you still expect to see the rest of the T35 dates this month up to the 28th, or assume they got enough shares from the rebalancing offerings? I think if I don't see any movement by the second rollover date, where the volume really picks up in the cycle, then I'll start to assume that they were able to cover a user. But since this first window usually has some movement but not a lot, especially not when compared to the follow up fail from expiration. Like this should be significantly greater. Or that's backwards. So this window, I mean, I think we could come up, but maybe we just come up like just under 200, right? And then this window I expect to have far more volume. So this is really where I'm looking for the confirmation, is in between these. Like and this is the peak, right? So but I'd want to see definitely some progress towards that peak before I consider, this a moot point for this quarter. What do you think about the 315 puts on Facebook for October 15th? I haven't seen them. 315 is the next resistance, though. So if it falls below that, then, it's going to fall probably to 300. Although I feel like October 15th may be too soon to see all that, to see a $30 drop. The market, I have no idea. It's just chopping, right? It's managed to maintain this this resistance level at 435. Um, I think SLD is gonna be right around here on the 18th through the 20th, and that's gonna either present a significant drop to the downside, or we're gonna recover and it's gonna drop us back to around 435. So either the market's gonna start recovering with the debt ceiling being pushed out and possibly the infrastructure bill getting some momentum. And then that SLD will either drop us back down to 435, or the market's going to stay sideways and then the SLD is going to drop us to a new lower support. Sorry if you addressed, only I missed it. If so, what benefit would shorts have to report the full short interest, like when it showed 140%? I don't think they intended to. I think it was just an accident, essentially. Like, they all reported, but they were unaware of each other's positions at the time. And so short interest ended up getting reported closer to its actual value, which I still think 140% was low. You said the past shows that there's a possibility that long-term hedge funds set up the ramp. It's not a possibility. It was institutional set up that gamma ramp going into the 17th. The amount of capital at play there was far more than retail has. See anything since to support that? I see options interest, but it's pretty far out. People are longs are still moving into positions, so we're seeing a lot of in the money calls at like 140, 150 getting exercised. But price action is stagnant right now. So IV's dropping. This presents now an opportunity for them to get in. Similar to, how they started building that ramp back here. Or not back here, back here. So during this period, a lot of that ramp that existed here started to get built up, right? Um, and I think this presents a similar opportunity with very low IV building or allowing an opportunity for them to build a ramp here if they choose. I canceled it. I have to buy a new chair. I haven't gotten around to it yet. Do you consider yourself a price action or indicator trader? Both. I don't I don't I don't leave a lot of stones unturned when I'm looking at getting into a trade. I don't think. I don't think there's any like I don't ignore part of the information available to me to just play like one set of indicators. Like I'll look at, you know, all of it. Long-term value, historical interest and movement. I'll look at near-term technical trends, long-term technical trends. I'll look at price action. I'll look at options interest. My experience in finance is in analysis, right? So I analyze. I would say I use a combination of like fundamental and technical analysis though. I'm caught up now. Like, here's my example. The price for GME 200s for November 19th went down 7.14% by close Friday, but the price for 220s went down 14.3%. So 220s are more discounted than 200s. Well, yeah, but also the price was further from 220s on close Friday than it was from 200s, right? So you're talking about intrinsic, like the intrinsic value, the like the gamma or the delta went down. on the 220s more than the 200s. Wait, Mel. Top two reasons I would choose to avoid penny stocks. Um, they're rife with crime because usually most of the float of the companies is owned by insiders. Um, secondly, rug pulls happen on them very, very quickly. The sentiment isn't strong around them. Like nobody who plays penny stocks has a lot of faith in the penny stocks they're playing for the most part. And so when fear kicks in, um, they drop extremely fast and no options. So like having no options interest stabilizing price movement really makes them move around like they can move very volatilely in one direction or the other. Um, and so there's a significant amount of risk. And then also you have to like kind of buy into them low and wait. And I don't do that. I don't like to be in positions for a long period of time on a trade. So there's a few for you, Eddie. Additionally, they're not held to the same standard as index traded companies. Like they can be completely illegitimate, fake, have no actual value, produce no real products. Their mission statements can be lies, because none of this shit is validated. You'll hear, if you pay attention to penny stocks enough, you'll hear about them getting delisted for all kinds of shit all the time. Sometimes they run after you've been holding them forever, and then they get delisted because crime. And that's why a lot of brokerages won't even allow you to trade some of them. Okay, see you later, Windmill. If China and Taiwan were to escalate, that would cause some uncertainty in the market. Uh, Not necessarily. The market loves war. That's like one of its favorite things. The idea that the U.S. could supply one or both sides with arms or weaponry, uh, would definitely cause some bullish interest. Or if we were to even get involved, ooh, the market really likes that. No problem, Katak. Thanks, Bradistonk. Metamaterial MMT. I don't know what you're referring to, Jasteki. Could China and America warning over Taiwan prevent global economic collapse? Possibly. That's what proxy wars do, right? Is they fuel the military-industrial complex. I mean, the U.S. would have a difficult time momentarily. We can ramp up production very, very quickly in this country. Like, we have shitloads of money and a decent number of natural resources. I mean, it's not like anybody's gonna use like nuclear weapons, right? It'd just be like proxy wars and shit. Have you have a good afternoon. Thank you, Canadian. I'll see you, man. The technicals are starting to turn around and look better for GME too, right? Yeah, MACD turning around. Everything from the technical aspects also looking good, which is a positive, but expect false signals there. Usually we get some before GameStop runs. So while the technicals may look bullish, there's usually like a false signal and a fail, and then the actual signal kicks in. I've noticed that on every run with GameStop so far. Definitely happened on the last one. It happened in June. There were indicators of it in March, like going into the big run up at the end of February. But yeah, TTM has so far been the most accurate on the daily. And TTM is starting to look pretty good. Far sooner in the cycle than it normally does, which leads me to believe that TTM also looked pretty good last September and January, or last October and January. China chill and the world economy not boom all at once. Do you expect them to try to spike IV soon? I mean, IV will spike if they start covering. IV on GameStop's is a very itchy trigger finger. The market makers are going to spike the like they're going to raise the IV on it if a move is. Usually they raise it before the move happens. We saw that on the 1124 calls, or like the 824 movement. IV spiked like a week before, a little bit, kind of out of the norm. They started pricing higher, and then that movement happened. So but their models are also following previous price movements. So if we moved on that same date every quarter, then they're going to expect. So this one IV is actually staying really low because this hasn't happened for a while. This hasn't happened since last year. And so if it were to repeat itself, then, IV would spike and probably stay up through January. That's why I'm buying a lot of further out options now. How do you feel about SPY intraday TA? It's fine, but the SPY is ruled by emotion. So, if like you can have the best TA in the world, and if the sentiment of the market moves against you, like your TA will fail. You need to use a little. You really need to understand the news surrounding the SPY when you're trading it. TA is great, but you also need other inputs. If the Fed were to announce tapering in November, it looks like they will. I think the Fed is already tapering, right? With the debt ceiling limits, Mohidala, I'm pretty sure that the amount of money that they can put into asset purchases is already reduced, because they're budgeting, right, in order to stay under that ceiling. So that may be why we've seen some of this downturn in the market, is with the Fed having to budget their asset purchases. We're seeing a taper really before it's even announced. But I mean, the PE10 or like the Schiller index still hasn't even hit the .com era levels, and I would expect it to hit or exceed those before we saw like the real potential for a solid crash. Like at this point, I still think a steep correction is more likely than a full-on market crash. I see a lot of people complaining about the time it's taking for their shares to transfer CS from their brokers, other than Fidelity. Do you think this is due to the brokers not having the shares? It could be due to the brokers not having the shares. It could be due to the brokers' transfer systems. I mean, some brokers just say it will take a lot of time and then, do it sooner. If anything, that's an indication that Fidelity is like not lying about, holding your shares and not lending them, and that maybe other brokerages have been. But I haven't heard anything about Vanguard's transfers or the time they're taking. I'd be interested in knowing that information as well. But if they're still facilitating them, then yeah, and also brokerages aren't really like, they're gonna just take as long as possible to do it, right? Especially if they've lent your shares out without your knowledge. If you could use only 3 indicators during MOS, which ones? Volume, VWAP, maybe an EMA or RSI. I'm more speaking to the people that keep getting delays. I don't think CS has nearly the number of shares in the float registered. Just have to get it done through the DTC. That's possible. I haven't really been paying attention to that because so many of the posts surrounding it are just inflammatory nonsense or lies. You know, just like I don't trust people to tell the truth on the internet. So people are like, you know, TD told me 14 days to transfer my shares, but like there's no like follow-up post like, oh, it was done in 5, right? It's just that initial post, and that gets everyone all hyped up, and they're like, TDA doesn't have my shares, blah blah blah, and then like that just creates a cycle of other posts discussing how TDA probably doesn't have the shares, and then you know people just get more and more angry about it. But like maybe that initial guy who started that whole sentiment, you know, got his shares transferred like a few days afterwards and just never followed up on it, right? Yeah, the 14-day I use on stream, Max. If we don't run much in these coming weeks, yeah, I'm gonna sell and move the whole position further out and play the 24th of November as my nearest term target. 8-9 2020 FTDs and 8-9 2021 FTDs and the corresponding price movement. Do you envision assuming continued fails versus rebuy? I know we won't get FTD data until 10:15. Yeah, we'll just have to see what happens on 10:15. If we get the corresponding price movement, that would occur before we even get data, and we're not even getting data from October, right? We're just getting data from this period. So we're not even getting, we'd only be seeing data from like half of the fails. All right. Thank you guys all for tuning in. I appreciate it. I will see you all bright and early tomorrow morning for our first day of market action. Thank you guys for hanging out, and I appreciate all the support. Um, I'll see you tomorrow. Wait, a couple more? I'll do a couple more. The one that sticks in my head was someone was originally told 2 weeks for the transfer. They pushed it back 4 to 6 weeks. I mean, who knows? Maybe they had a margin account that they transferred out of. There's all kinds of other issues that can arise that, you know, really aren't stated in their fucking Reddit post. I really like TMI. Is it better than MACD on intraday? Yes, for sure, but also on daily or more. I think it's better long term than MACD, but definitely better on the shorter term time frames. I think it's just more accurate than MACD. Thank you all. I appreciate it. You guys have a great night. I'll have the DD out hopefully later. And then I don't know if I'm going to do a live stream tonight, but I'll release like the DD video tonight. Probably. We'll see. All right. Thank you.